Dropshipping. There are two ways to make money from dropshipping. You start dropshipping, or you find a dropshipper and you steal their identity. Nah, I'm just kidding. Don't do that. The real second way is to invest in dropshipping itself. Whether you're an investor, a dropshipper, or just have an interest in the matter, you're not going to want to miss this video. Let's go, roll the intro. Firstly, why should you want to invest in dropshipping and e-commerce as a whole? The Office of National Statistics, the ONS, reported that e-commerce as an industry grew by 46% in 2020. This is whilst the retail as a whole dropped by 1.9%. You might be thinking, well, that's only because of the pandemic. Well, you're not wrong. Well, you're half wrong. E-commerce growth has been beating retail growth for over a decade now, but the growth rate went to the moon during 2020. Not only were more people opting for online shopping because they didn't want to go out, but more people were also becoming online business owners. More people were searching how to make money from home, and more people were interested in dropshipping as a whole. Shopify's Q4 financial highlights state that the number of consumers buying from Shopify merchants grew by 52% from 2019, resulting in nearly 457 million customers. 457 million. That's crazy. Just let that sink in, because that's more than the entire US population who are buying from e-commerce entrepreneurs. That's absolutely nuts. So don't let anyone tell you that dropshipping is dead or Shopify is a scam, because the numbers speak for itself. E-commerce is a thriving industry. Statistics show that, and dropshipping is at the heart of that. You can't type in how to make money online without seeing a dropshipping video. Which reminds me, if you're already into dropshipping, check out my channel. I do a lot of dropshipping videos going into the specifics and answering the questions that the big channels don't answer. So yeah, do check that out. So how do you invest in dropshipping? Well, you invest in dropshipping in the e-commerce related businesses. Now, I don't mean invest in businesses that begin with dropshipping, like Wayfair and Chewy that started as dropshipping stores. I mean invest in businesses that are directly related and are directly involved in supporting the e-commerce industry. For example, the obvious one is to look at the e-commerce platform. So the top rated e-commerce platform at the moment for merchants, when I say merchants, I mean entrepreneurs and people who are using third-party websites to sell their products. So the top platform for merchants is Shopify. If we look at Shopify's share price in the last year, you can see the growth that it's had.
Consumers are shifting their spending from in-store to online, and e-commerce presence has now become so critical for businesses just to stay afloat. And many rely on platforms like cloud-based Shopify, which has now jumped 73% since the WHO declared a pandemic in mid-March.
I bought shares in Shopify in 2017. That was 4 years ago, when they were just $50 per share. At the end of that year, they reached about $100-ish. Me being a typical uni student thought, that's amazing, just in time for New Year's Eve night out, let's go sell the shares. Those shares are now worth over $1,200 per share. So anyway, moving on. Not all e-commerce platforms are publicly traded, and I always recommend you do your own research too. After all, I'm just a guy on YouTube. So as a dropshipper, there's a lot for you to do. Marketing, content creation, customer service, and web design. What a lot of people do is they hire freelancers from websites such as Fiverr and Upwork. Now you see where I'm going with this, right? I'm sure you can see the trend now. You can see from these screenshots that Fiverr and Upwork have shared the same growth as Shopify in the past year. Now, I know they aren't in existence because of e-commerce. Like, I know they have different purposes and other aspects, but they do move in correlation, because when e-commerce merchants increase, it's likely that the amount of people hiring from Fiverr and Upwork increase too. You've also got a lot of people who are dropshipping. They've taught themselves valuable skills which they can use as a freelancer. So you've got people who have maybe taught themselves web design, taught themselves social media marketing, and now they've realized that they can actually use those skills and act as a freelancer. So you end up with more users purchasing gigs and more freelancers signing up to sell gigs, ultimately leading to the increase of users altogether, and again, the increase in revenue and share price for the company. PayPal and Square are two payment processors. which are often favored by dropshippers. The reason for this is because they're fairly easy to use, they're nice and simple, they're available in most countries, and are known to be secure and trustworthy from the customer's perspective. The reason I'm mentioning this is because they move in correlation with the e-commerce industry. The more people are involved and selling products, then the more people who are signing up to use PayPal and Square as their payment processor. You can see from the screenshots here that there is a pattern, there is a trend. The e-commerce industry as a whole has increased, as did Fiverr, Upwork, Shopify, and as did PayPal and Square. So this is what I mean. You've got to think about the businesses that are not necessarily directly involved, but directly related to the e-commerce industry. This leads me nicely to my next two companies. My next two companies I'm going to talk about are Alibaba and Etsy. Alibaba is a wholesale website where dropshippers will bulk buy their goods when they're at the stage of shipping to a fulfillment center. Etsy is similar to eBay and acts as a marketplace for sellers to sell their items to consumers. The items tend to have a handmade or unique feel on Etsy, so sellers can justify charging a higher price. It's quite a popular platform, one that I use as one of my primary sources of income, so do check that out if you've not looked into it. Now, looking at the screenshots, again, you can see the pattern, you can see the trend. The growth in the industry has gone up, and there's been growth in these companies. They have contributed it in some way, shape, or form, and they are benefiting from it as well. This leads us nicely to our next question. How do I invest in these companies? How can you invest in these companies? You've seen all this growth. Is it too late to invest? No, it's not, because the growth is still happening. You can still get in on the growth. You can still invest in these companies, and you don't need a ton of money to do it. You don't need a lot of money to start investing in them at all. And I'm going to tell you how. You can either invest in them as an individual stock. For example, you buy one share of each as and when you can, or you buy fractional shares. So you buy 1/10 of a share. Let's say Square is trading at $200. Rather than buying the whole share, you can buy half a share, a fractional share, for $100. This is a good way of being able to invest when you don't have an awful lot of money. This also means that you can invest in more than one company. This is good because it means you're diversifying your portfolio. It means less risk because you're not putting all your eggs in one basket, but you're still benefiting from the growth of the industry. If one company doesn't do as well as the others, then that's okay because you've still got money in these other companies. You've still got money in the industry. So as long as the industry goes up, then you're going to be seeing some form of growth, some level of growth. The downside of doing it this way is that if the industry as a whole sees a dip, then your portfolio will see a dip too. If you're in the UK, you can download the Trading 212 app using the link below in the description and make a trading investment pie. This pie can consist of as many stocks as you like. You can create an econ pie and set an auto invest for as much as you like, as and when you like. For example, I have a low risk fund pie that's just made out of Vanguard funds, and that invests £100 for me at the end of every month. It is honestly that easy. So that's all from me. I hope you found value in this video. Do consider subscribing to the channel, it really helps me out. Drop a comment below, I will answer every single one of them. Thanks for watching, and I'll see you in the next one.